Today, I've got Zack from Phipps, Brittain Real Estate with us, and we're going to be talking about the Kitchener-Waterloo Cambridge market update. Zack, what's been going on in your market?
We're down 16.5% in the number of listings in July compared to 10 years ago. A couple of months ago came out, Kitchener-Waterloo is the fastest growing city in Ontario in Canada other than Toronto, right?
Mhm.
And the number of listings and the volume of deals is down. Our population has been going like crazy for about 5 to 10 years. How is the volume of properties being purchased and sold down significantly? A couple months ago, it was down 30% year over year. So what that tells me is we have a growing population and volume of transactions is down significantly. That means there's a lot of people on the sidelines. And eventually that pent up demand will have to come back to the market. And that's something we're watching really closely. Deals right now, though. A lot of people come to the Canadian Real Estate Channel because they want to know, how the F are you finding deals? How am I making money in Waterloo region real estate right now? And there's two options right here, but there's a few other kind of nuances real quick. So
Welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, your host, and today I've got Zack from Phipps, Brittain Real Estate with us, and we're going to be talking about the Kitchener-Waterloo Cambridge market update. We're going to be covering the summer and all the stuff we missed since I was gone. So, Zack, what's been going on in your market?
brother, welcome back to the real world. Our market is back to normal. Seasonal trends are real, and we are seeing a slow shift. And all of you lurkers on the sidelines are starting to poke the head out saying, hey, Zach, is now going to be the right time? Do we start seeing some deals? So although the summer is nice and kind of, a nice little calm down from the crazy spring, a lot of our people, a lot of you investors that are, watching videos and doing your own education and kind of figuring out what markets you're looking at, a lot of questions coming in from you guys and girls. So it's been nice to really connect with a lot of people. And it's been nice to start setting up. We got a lot of clients and investors looking to make moves before the end of the year. A lot of them are kind of getting that in line now. So we're a lot of prep stage right now. Today though, we'll go over our summer market data. We're kind of mid-August right now, so I'll share kind of what we expect to see towards the end of the month and the beginning of September. One thing I wanted to cover too was a lot of people reach out and say, hey, Zach, I'm looking for a deal, and maybe be a little bit vague or not necessarily understand what types of deals fit best for them. So we've had actually a handful of clients successfully acquire new properties in the last probably about 60 to 90 days purely for investment. And we're seeing some really awesome deals. So I'll go through the types of deals that we're seeing make sense for these investors. As well, a big thing that we focused on personally and for our clients we've been working with for a few years now is adding value to a current portfolio or scaling it. So we'll touch on that. And then for you buyers or sellers, if you're thinking about making a move, whether it's an acquisition for yourself or an investment, or maybe selling your primary residence or even your investment property, just quick hits for strategies for you at the end of the video. So if you guys are thinking about making a move, check out the end of the video for that. Otherwise, we'll go through some market data and some deals right now, Adam.
Awesome.
And I know I totally lied to you guys. We'll go through the market data in a second, but a lot of new viewers the last couple of sessions. If you guys don't know, we do a weekly email on we call it our investor hot list, phippsbrittonrealestate.com/contact. Go through our contact form. If you want to share the types of deals or info you're interested in, I can personally follow up. Otherwise, you'll automatically be on my weekly email list. A lot of exclusive deals. I've had like 4 or 5 A+ wholesale deals come across my desk. Probably about 5 weeks. We scooped up one of them for a flip. There's another one that's a good wholesale. And then 2 or 3 of them kind of got bid up a little bit higher than my guys wanted. But we're getting a lot more action in terms of inventory, really starting to simmer up and ready to make a sale. So if you guys are looking for on market, off market, you just want to see what types of deals we're looking at, Investor Hot, this is a great touch, especially if people have no idea what's going on in one of the region, Adam. I share market data, press releases or news releases or data that I think is important. If you have no idea what's going on in one of the region, or if you have investments here and you want to monitor, this is kind of just a good, quick 2 to 5 minute read. once a week that can help you guys out.
Well,
Um,
the thing I love about the hot list is I know you're doing a ton of research into your market and you're always staying up on the different trends, the different things that are happening with the municipal news, and you're always pushing out good deals there. And I think the really good thing about the hot list is it's pushed to you as a consumer. So I don't need to go out and do all my own research. I don't need to go out and like connect with a bunch of different wholesalers. You guys have people coming to you, and then you're pushing that information out to people that sign up. It's a fantastic deal. It's free, like you really can't lose by signing up to that. So I really encourage anybody watching this to look into that.
Hook us up, and I do it personally. I don't have a virtual assistant or
Yeah,
one of our
that's
admin doing
big.
it. Like, I'm looking at this stuff because me and my clients are either looking at buying or selling these types of deals, or developing these types of properties, or making these types of investments. So I have my personal knowledge and contact kind of behind all that info, and you get access to me. A big thing about that I considered when we were building our businesses, Adam, was I still want to be the person that's working with my clients. I still really enjoy that and can provide good value to them. So, I don't want to hand them off to a buyer's agent necessarily, or, hand them off to my assistant. I still, gain a lot by providing value and working directly with my clients. So you guys get access to me. I like it that way. It's fun. Um,
Yeah,
July though. I know we're getting towards the end of August by the time you guys are checking this one out. I said it in the intro, seasonal trends are back. And I've talked about it in previous videos. Was during COVID, Adam, our like seasonal trends in the sense of what was typically happening in winter, spring, summer, fall didn't make any sense. The
right.
seasons of the year, the weather didn't, dictate what was happening in a market like it typically did in Southern Ontario, but that's back. And people always forget how quiet summers really are in
Yeah,
Canadian real estate. The bulk of your businesses and sales are done in the spring and close in the summer. So the heavy lifting's already done. Most people in the summer are moving into the new family home, getting the kids ready for school, doing that big home reno, taking the big family vacation, whatever it might be. So businesses get slow. Number of listings is down, number of volume of sales is down. Like, that's really common for this time of year. So don't let month to month data spook you, investors, right? We're down 16.5% in the number of listings in July compared to 10 years ago. That's something that was kind of surprising. Adam,
that's
look,
very surprising.
couple of months ago came out, Kitchener Waterloo is the fastest growing city in Ontario in Canada, other than Toronto, right?
Hmm.
And the number of listings and the volume of deals is down. Our population has been going like crazy for about 5 to 10 years. How is the volume of properties being purchased and sold down significantly? A couple months ago, it was down 30% year over year. So what that tells me is we have a growing population and volume of transactions is down significantly. That means there's a lot of people on the sidelines. And eventually that pent up demand will have to come back to the market. And that's something we're watching really closely. On that note, average sales 782. We're down about 1.5% year over year. Okay. The sky's falling. The prices have been cut like crazy. We've seen significant cuts from all time highs, but we are very similar to where we were at even 3 years ago or 4 years ago. We're very
Yeah,
close. I'll show you a slide after this. And the other one I really like to monitor, and that I really think people should put some stock into when understanding, let's say, the temperature or the trends in a market, is the inventory, and the inventory for your specific class. So if you guys are only shopping just single family detached homes, well, the amount of inventory in a townhouse market or in the condo market may not be as relevant to you. But overall, market wide, we have 3.5 months, 3.3 months of inventory. What's crazy is condo market inventory is very high. Townhouse market inventory also took a huge jump, over 85% in the last month, but detached inventory is still well below 3 months of inventory. So if you're out there looking for a family home, detached home, getting a really good deal in a detached home is still kind of tricky. Whereas if you're looking for a townhouse or maybe a condo, you have way more inventory, less competition, right? Less likely to compete or pay significantly over asking price. So if you guys are looking for specific types of deals, maybe dig another layer deeper, or drop us a comment or send me a message through the investor hot list email and see, hey, Zach, I'm looking at, triplex listings, fourplex listings, how many are available, how many have sold. Actually, on that note, totally off topic, but I looked at triplexes and fourplexes in Cambridge. Two have sold since the beginning of the year.
wow.
Two.
That's crazy.
Two.
What's going on with
In
that?
the last, sorry, I shouldn't say that. In the last 6 months, not since the beginning of the year, in the last 6 months, I pulled the last 3 months of data, and I was like, that can't be right. So I pulled the
Yeah.
last 6 months of data. Two, one of them one of our clients purchased. The other one just got sold 2 weeks ago,
Wow.
3 weeks ago.
That's
So
wild.
the whole city, there's 200,000 people in Cambridge almost.
Yeah.
There's, probably 15 listings on the market for 3 units and 4 units, legal 3 and 4 unit properties. Only two have sold in the last 6 months. That is slow going. Investors are holding on to those prices, Adam. They're sticky on price. They don't want to give it up,
Yeah.
right?
Yeah.
So I wanted to get to this next slide just real quick for perspective. And listen, 10 years ago, we were at 332 for average sale price for all properties in Waterloo region. I think people need to understand how aggressive
Yeah.
2014 to 2021 really was, right? Like, let's just put the brakes on a little bit here. And I am a beneficiary directly of this huge run up in price. I was actively buying and selling real estate for my own investments. I'm actively helping clients buy and sell real estate. Higher prices going up means I'm making more money on flips. I'm building equity in my holds. I'm helping clients buy and sell properties. So I think for, people who aren't necessarily invested in real estate now, like take a little bit of perspective on, how the last 3 years have gone in terms of just aggressive up and downs, but also you investors that have been holding real estate and investing in real estate for some time, like take a breath. What happened the last 10 years is probably not going to happen for the next 10 years. And certainly the last 3 years with COVID and the aggressive rise or fall and rise in interest rates, like this is this stuff is pretty rare in the sense of how quickly these things have happened in the world of real estate. So for me, we're expecting the rest of the summer, especially in the rest of the year, to be fairly steady. We'll have a couple of months, maybe we'll be up a little bit, maybe down a little bit in towards the end of the year as we get quieter for the winter, which is again in line with seasonal trends. But general expectations are, even though interest rates may come down a little bit, price points aren't expected to move nearly as aggressively as they had in previous years because the market is very cautiously optimistic, Adam.
Yeah.
I don't know if you're noticing it with your people and in the markets that you're more active in, but for us, it's, people are interested, but there's not the aggressive competition. It's not the sense of urgency there was 3, 4 years ago, which is probably a good thing. Where we're really operating more of a balanced market that is slightly optimistic, I think would be
Yep.
the best way to describe it right now.
Yeah, it looks like that new trend line starting just after 2022 is probably pretty similar to the 2011 to 2014 chart, which is just like steady growth, healthy, balanced,
Yeah.
not shocking. And ultimately, like as good real estate investors, we're looking to be bored, right? Like I don't actually love the idea that a market can double on me and therefore probably crash 50% on me. Like I kind of just want to be bored. I want to invest on fundamentals, do all my strategic renovations and get high rents that are stable. And I think that's what people should be aiming for, and the type of market that's balanced in the way that it looks like it should kind of balance itself out now, that's what provides you a stable footing to have those stable investments. So I like that.
Yeah, the volatility of the last 3 or 4 years, I think, has really skewed people's opinion and experience in real estate
Yeah.
because the one of the biggest benefits of investing in real estate is that it's boring and steady. It's boring and
Yeah.
predictable. And the last even 5 to 6 years has been anything but. So I think that's a really good reminder for you guys and girls watching the video is like, hey, real estate's supposed to be slow and steady and boring. That's one of the benefits, right?
Well,
Please bring back boring real estate.
yeah, and really the benefit of investing in real estate is about the leverage. It shouldn't actually be about the volatility. Like it shouldn't be about surprise. It should be about steady growth using leverage in strategic ways. And I think when we use leverage in a volatile market, that's how you actually get exposed to sort of the dark side of leverage, the flaws, the pitfalls of leverage, right? Like you want to use leverage very cautiously because every dollar you're putting in, you have 5 times that at least in most cases in risk, right? So that risk comes with reward, but holy smokes, that can get scary if it truly is a volatile market.
It can get scary real quick. So we just talked about some of this. I'll skip to second point. Inventory is at the highest and the volumes at the lowest. Um, One thing to note, I think we said it on the previous video too, Adam, is let's say the top 25% of the market, that's selling in less than a month, half that's getting multiples, no conditions. But that's like the top parts of the market. Those are the A plus locations, features,
Yeah.
conditions, shows the best, priced well, marketed like crazy. Those ones are still going like crazy. It's just such a significant drop off underneath that. Let's say half the market is, probably selling closer to 30 to 60 days. And then the bottom 25% of the market's not even going to sell at all. They're just way too unrealistic with price. Maybe they need a specific price to get out from financial obligations, or maybe they're just only price motivated for retirement or relocation. I get it. If I'm selling my family home, I'm in my 60s. I know, I'm not so old I can't take care of it anymore, but I'm getting there. All right, well, if I gotta put my place up for $1 million, and it makes sense for me to sell it at $1 million because I can go afford to, buy a little condo or move into a retirement facility or go rent a nice apartment for the next 10, 20 years. Well, I'm probably not motivated to sell it for, 200K less right now. All right, well,
Yeah.
I'll hold out and try and get my $1 million, or I'll just relist it in a couple of years when the prices recover. And this is just
Yep.
one specific example or one kind of cohort of sellers. But I think people need to realize when a market shifts so aggressively, like it's going to delay or change plans for a good portion of the market. And,
Yeah.
in another slide, we'll talk about just finding the motivated, right? But for the purpose of wrapping up kind of what we expect for the next month or two, I put this exact same number 3 point, lurkers. I think on one of our videos in the spring, March or April or something like that.
Yeah.
But the lurkers are looking now. My
Yeah.
lurkers out there. I see you. You're looking. I see you. You're calling me. You're sending me emails. You're looking, and I like that. I'm always looking. But I wanted to put it up as a poll because I had some really good comments in the last video that we did. I had some funny ones. A real estate
Yeah.
agent always telling people that now's a good time to buy.
Yeah.
Obviously, now's a good time to buy. I get paid if my clients buy real estate. I like money. Oh no. But I also want to make a very, very important point here. You have nothing to gain as a real estate agent by telling your clients to buy when it's not the right time to buy for them. You're only going to put them in
Yes.
a position where either you're going to hurt the relationship or them financially or both. And that is like the worst thing you could do as a business person. So I find it's more appropriate to consider what is the short term and the long term goal, and is the risk associated with making this acquisition going to offset the potential gains or accelerate their growth to that goal. So I wanted to put a poll out. Values have dropped significantly in the last 2, 3 years, but we're pretty close to where we were at last year. Now, I'm a betting man. If I had to bet, I would bet that the values would be the same or higher this time next year. That's just me. I would assume, based on what I think is going to happen in the interest rate environment in our economy, in the development, building, and infusion of new units to a growing market in Waterloo region, I would assume that demand will pick up and financing will improve, and more buyers are likely to purchase next year than they did this year. So as long as we don't have some weird, crazy event, I expect the prices to slowly start to creep back up. But me and Adam and many other people are hoping and praying that it is a little bit more steady than the crazy increases or decreases that we've had before. So if you guys have an opinion, I'd love to hear it. Hit us in the comments, or you can just thumbs up or thumbs down my opinions in the comments and show me some hate. I don't care either way. But me, I buy and sell in every market. Most investors that are doing this full time, they're buying and selling in every type of market. It's just maybe they change up the strategy, or maybe they change up the type of asset or the type of property they're going for. But rates, lack of options, friction to move, these are all things that are changing a lot because Waterloo region and most of Canada is getting quite expensive quite quickly. So,
Yep.
we're following those trends specifically. But you lurkers out there, I'm watching you. Um, Fest or hot list. Let's go. Okay. Deals right now, though. A lot of people come to the Canadian Real Estate Channel because they want to know how the F are you finding deals? How am I making money in Waterloo Region real estate right now? And there's two options right here, but there's a few other kind of nuances real quick. So just right off the top, duplex or triplex conversions, the numbers still work at them. So if I'm buying a single
Yeah.
family home, I'm converting into 2 units. The numbers are still pretty good. You're, about 100 to maybe $150 in the green. So let's call it break even, right? But you add a ton of equity right away and you have two brand new units. One of them is not rent controlled, one of them is. Okay. So these are good value add. You have multiple options on an exit, live in it, house hack it, rent out both units, sell it vacant for a premium, and the numbers work for now. If you can take a single family home and without adding additional square footage to the footprint, and you can convert it into a triplex, those numbers are sexy, sexy. And I'll show you how we do that. Next up, 3 to 6 unit buy and holds. Those are about 150 to 300K cheaper than they were 2-3 years ago. Okay. Now, 2-3 years ago, at those numbers, they didn't really make that much sense because the rents were typically fairly depressed for these purpose-built multi-units, but the
Yeah.
prices are better than they were yesterday, and you'll benefit from falling interest rates in the next, call it 1 to 5 years. We lock in today's price, and what a lot of our clients are doing is, if I can find a fair deal where I'm breaking even or making a couple $100 a month now, all right, well, when I go to either renew or refi my mortgage in 3 to 5 years, all of a sudden it's boom, that either turns into a
Yeah.
cash cow, or I have enough equity where I can go buy another one without taking new cash out of my bank account to go buy another property. So our clients that are finding success are doing those types of deals right now. And I'll go through a couple just like examples. This is actually one of my properties, the closing from hell that just closed. Oh my God. Guys, even pros like me are not invincible or not able to dodge nightmare closings. I still deal
No.
with shit. I'm not perfect. So,
All right. Let's get a war story.
no, we're not doing war stories on this. But, it's closed. I got the cash. Keys are gone. It's done. We're rinsing our hands. But this is
The
an
war
example of
story
one.
is problems or profits. It got done. That's what
It
counts.
got done, baby. It got done, right? um, Bungalow, brick built, 1,100 square feet, front door at the front there, side door around to the right that goes right into the basement. All right. Bungalows on decent sized lots are the layups for duplex conversions. Great for house hacking. You know, you can even put your old parents upstairs. You can go live in the basement, whatever the fuck you want to do. There are lots of options with these types of properties. But here's how you take it to the next level. Future value add would be either adding an ADU or getting the site ready or the plans ready and the permits ready to build an ADU and then selling that. So this property, I actually lived in this house with my wife. This is the first house that we bought. This is the Cat P house. We lived upstairs. We rented out the basement. Originally, I was going to go build an ADU in the rear yard, but I had an opportunity to sell it and put the equity and the capital from the sale into a better performing asset. All right, now we're making moves. So this one we bought in 2018, I think. And the arrow there is the walkway that would go back from the street to the ADU. It's a 50 by 130 lot. If you can get bigger than 45 frontage and deeper than 120, that's awesome for building ADUs or potential future development. It gives you lots of space to either add storage, whatever you might want to do for the rear yard, or like I said, build an ADU. And in Kitchener, I can build a duplex ADU. So I can build a
Nice.
1 or a 2 bedroom upstairs and a 1 bedroom plus den in the basement for like 400 grand. And all of a sudden I got a legal fourplex where 3 of the 4 units are brand new and they are not rent controlled. So what a lot of our investors are doing is they're looking for properties like this that either already have kitchens in the basement or they can get it at a significantly reduced price so they can afford to do the whole basement unit and make it legal. And the numbers check out. We looked at it. I'm looking at another deal later today. There was a bungalow that sold for 600 grand on a 53 by 125 foot lot yesterday. And even at 600K, if you have to demo the whole upstairs and downstairs, the numbers can still work. And so we find value in these for newer investors, if it's a first, maybe a second, or people that want to get their hands dirty and get a little bit of sweat equity, people that want options. We've talked about options in our videos before. These provide you so many options and is a good step if you want to get into the Waterloo region market. I've also had lots of questions on these. These are purpose-built triplexes. So 3 bedroom, 1 bedroom, or 2 bedroom, 2 bedroom, 1 bedroom, really, really common at them. Lots of
Yeah.
purpose-built brick triplexes and fourplexes in Waterloo region because a lot of Waterloo region was developed by European builders and developers. This stuff's really common in Europe. They would go build a subdivision, and the first half of the subdivision would be semi-detached for combined families, and a lot of purpose-built rentals where even the builders or their families would move in there and rent out there before they could afford to go buy and move into a detached home. So these are typically on 50 by 130 lots. This one is on a 53 by 153 lot actually. So wide and deep. If it's a triplex, you can add an ADU on it. If it's a fourplex, you can add more parking, storage, or garage space in the rear yard. These are good if you are happy to pay a little bit of a premium for a purpose-built rental. And sometimes that premium is worth it because they're designed, you have separate hydro, right? They're designed for parking and storage, right? They already have the systems in there that you need. So you don't have to go in and redo, you know, put in new HVAC systems and AC and furnaces. Typically, it's just a boiler. So there are benefits to this. And easy to get tenants in here. Tenants much prefer to rent this and will pay a premium if the units are nice because they're typically bigger than an apartment and have more parking than an apartment, but be in just as convenient locations. So if they have to take the bus, walk to amenities, a lot of these are in very family friendly and commute friendly areas. So, we like these for, an investor that wants to kind of take a step up or doesn't want to do all the renovations, the permit work of a duplex conversion, just kind of wants a boring buy and hold that you could hold for 25 years and use to either pay down the debt and increase the cash flow or refinance every 5 to 10 years and go buy another. We see these as kind of a middle ground between active and passive in terms of an investor that's looking to do it on their own.
Yeah, that's awesome.
Yeah.
I can't speak highly enough about purpose-built stuff. It's so good for the tenant and it's so good for you as a landlord. Like it's just so much easier.
For less experienced investors, you think you're paying a little bit too much because they do come at a little bit of a premium, but
Yeah.
the management and potential exit or refinance or sale of them, you get that
Yeah.
premium back on that exit too. So it's relative, right? I just pulled
Yeah.
up the lot here quick, Adam, though, because this is a 53 by 131 lot, and they have a detached structure at the back right corner. That's actually a triple car garage that they put in there.
Wow.
A lot of and so if you can't put an additional unit, you don't want to, you can't get the permit, it doesn't make sense. Honestly, adding extra storage is not a terrible idea because
Yeah.
these units don't have storage, right? Bikes, cars, just stuff. Charge your tenants an extra 100 or 50 bucks a month, depending on if it's parking or storage. Increase your cash flow. We'll get to more of that fun stuff later. Oh, wait, we'll do it right now. Adding value to your portfolio. Adam, you held property for 5 or 10 years, you
Yep.
got a little cozy, you got a little comfortable, but now your interest rates or your financing is changing up, or you refinance the property and your monthly's not looking as good. How are we adding, value? How are we increasing income? Quick, dishwashers, adding laundry, adding parking, adding storage, or adding additional units, adding something that isn't currently there that somebody's willing to pay extra for or would command a premium. Most straightforward way to increase income. Now, some nuances in there is, you know, how, what exactly do I need to do? And aside from that, whether it's increasing the condition, curb appeal, does it make sense to paint or put on new trim? I'm going to tell you right now, if you're taking a 4 out of 10 rental unit and bringing it up to a 10 out of 10, okay, that makes sense. But if you have a six, let's call it maybe a 7 out of 10, completely redoing the unit, probably wasting some money, right? The
Yeah.
difference in rental income between a 7 out of 10 and a 10 out of 10 isn't worth the 30 to 50K to lipstick a big 3 bedroom apartment. It's just not. So, if you're planning on selling it or refinancing it, or you need a specific number for your numbers to work, okay, then maybe let's have a more specific conversation about a specific property you as an investor may have. But generally speaking, you want to keep it kind of between that 6 to 8 out of 10 because that's where you're not spending a crap load of money of an investor to keep the property pristine. That's at least in my experience. And then reducing expenses. A lot of people are looking at improving their financing on properties lately. Managing your gas, your water, utilities is huge, either passing on responsibility or some of those costs onto a tenant. There are strategies to do that with lease agreements as well. If you have questions on how we position our leases, send me an email. We'll hop on a quick call. And then property management. A lot of our investors are managing their own properties. So a lot of the questions we get are, oh, well, what happens if this tenant does X? What paperwork do we do? What happens if this problem comes up? We get lots of those questions. And this is honestly where we earn a lot of our money for our investor clients that just don't have as much experience with it. Like I said, I'm not perfect. I've been a landlord and tenant board. We've had to do evictions. We've had, tenants go squirrely, leases not work out, right? It's about solving problems. And if you solve the problems, Adam, you get to the profits, my friend. So if you have
Absolutely.
questions about managing or adding to your portfolio, whether it's improving your current assets or better managing them, send us a message, right? The at the bottom there, though, the one thing I focused on was return on equity. is I really challenge people, if you already hold real estate, if you have for even a couple of years or maybe an extended period of time, is look at your return on your equity. So what we did was I started looking at our return on equity because we had built up some equity in some properties, and I wasn't going to achieve the rate of return or the growth if I continued to hold my properties. So I either needed to refinance them to access that equity or sell them to access that equity, right? And part of the reason why we ended up selling that bungalow we showed earlier. So if you guys don't know, quick Google search. Your equity is the market value of your property minus your debts. Just quick maths, right? So a lot of people have reached out for kind of like a quick market analysis on properties. Hey, Zach, I got a fourplex in Kitchener. It's making this much rent. What did it sell for? Right?
Mhm.
That'll give you just a quick and dirty number so you can calculate how much equity you have. And what we're looking for is in my investments, I need to be doubling every 5 years or less, minimum. And that's for me. That's just Zach. That shouldn't necessarily be everybody's goal, but for Zach and his goals, what I want to do and what I think is capable in our markets is I need to be doubling every 5 years or less. And so for my duplex I sold, I didn't think the value was going to double in the next 5 years. And I didn't
Yeah.
think that my options to refinance or to get different financing options was going to give me access to the capital I wanted from that property. So I decided to sell. All right. So I that made sense for me because it allowed me to move on to other projects that would, one, help me learn and grow, but two, provide me a better opportunity for a higher rate of return. Because if you're doubling every 5 years, it's like 14 to 15% a year return. Guys, double digit returns is good. In real estate, you
Yeah.
could be doing better, but let's be real. Double digit returns consistently without crazy amounts of risk, guys, that's good. Especially if you own the asset as well. Like, I just think that people's ideas of what a good investment, expectations of rate of return kind of got skewed. So let's everybody take a deep breath here. This is kind of the stuff that we're looking at. And we're going to scale into bigger deals. We've talked about it on the channel. We've shared a little bit. We're playing real life Monopoly. We're moving from single family flips to duplexes, triplexes, fourplexes. Now we're moving on. We're selling some of those smaller properties because the return on equity and our ROI is going to perform better if we move into larger multifamilies, purpose-built rentals, or even new builds and developments. So, scaling into bigger deals, right for me. I don't necessarily need cash flow right now, so I'm focusing on building equity and net worth. I don't need a building to make positive 10 grand a month. I have enough money coming in to pay my mortgage and the car and get groceries for the girls, right? So I'm focusing on my net worth. But for those of you that are maybe, hey, I want to quit my job, I need enough money to live. All right, then maybe immediately we got to focus on something that's going to give you a little bit more beefy cash flow, right? Then look at your current resources. How much capital you got is the easy one. What your assets are, all right, that's another easy one. But your skills, your time, that's much harder to judge. So give it real consideration. Do I have the time and the skills and the energy to do this full time alone? Am I going to find the deals, manage them? Or do I need to bring in other people? Or can I learn those skills and free up that time to execute it on your own, right? And I don't want to overcomplicate it, Adam. You could go and buy one investment property every 5 years. It could even be a duplex or a triplex. And you are doing awesome. You
Yeah.
don't have to go and buy hundreds and hundreds of units, big fancy buildings, big fancy. It doesn't have it can be stupid simple, and you can do very very well, right? And then
Yep.
financing, commercial lending is totally different than residential lending. So maybe I could do a whole video on CMHC, commercial loans, the difference of that. But I think for our next video, we'll go over kind of how we're moving on from some of our smaller deals into some of these bigger ones and why that makes sense. Because I went from 0 units. That bungalow I showed you first was the first property we bought. That was our first investment
Yep.
property. I had zero properties, and we went to 60, with just over 60 units by the end of this year in five
That's
years.
awesome.
And like that's not to be like, oh, look at how awesome and impressive that is for Zach. It's just to show you guys like how much you can accomplish in 5 years is crazy if you just decide, hey, I'm just gonna make sure I figure out how to solve problems and I just don't take too much unnecessary risk. You surround yourself with the right people and get a couple good pieces of advice, and boom, 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 things can start happening real quick. So I think in the next video, we'll kind of go over some of the general numbers on how we got into the first couple deals, because those are the hardest ones for a lot of people, and then how we
Yeah.
leverage those ones kind of into the next one or two. Because kind of, you mentioned it in one of the videos we did together, I think last month or the month before, is just like that 1 to 5 properties is the
It's so
trickiest little,
hard.
because in order to get there, you've really got to muscle your way. You're probably really scraping by for those first couple of deals. You're taking a
Yeah.
little bit more risk than you maybe want to. And if one or two things goes wrong at the same time, like things are tight. And so, we're that kind of part of our portfolio is in our rear view, thank God. But for a lot of our people, they're living and breathing that. And it's true. It's so true. You're right there where you're like close to really getting to a point where you're really building real net worth and real equity and real cash flow. But navigating through that, you know, got to muscle your way
Yeah.
through, baby.
And there's something serious to be said about the delayed gratification and the leveraging of that fourth R there, which is what you're talking about on that return on equity, is the decision to repeat the process. So I think we could do a great video on that next on our next video where we really just talk about what's required to delay the gratification, actually repeat the process after you've got some initial gains and some initial momentum. Because I think a lot of people pull the plug a little too early on that and they start
Yeah.
using that newfound money, that newfound equity for other purposes. And I think if you really concentrate on that 0 to 5, the 10 to 20 is so much easier if you have that muscle developed for discipline there. So I think that'd be a
Yeah.
fantastic value add. So make sure you guys come back next month because that's what we've got for you.
That's a good point though too, is I think I'm just kind of numb to that delayed gratification because
Yeah.
that was always something that didn't bother me personally. And then the people that obviously I'm surrounded with that I'm investing with are think the same way. But if you're kind of the only person in your family or in your world that's really like focused
Yeah.
on building, an investment or wealth or some sort of, financial security, like first off, you're not alone, friend. We're here for
Yeah.
you. If this needs to turn into a therapy session, come on, give me a hug. It'll be okay, brother. Just keep going for the next 5 or 10 years. You'll do
Yeah.
great. But
Yeah.
don't underestimate how tricky that is for people. It is. It's difficult. But what I can tell you is it's worth it. It's worth it. I got friends
Yeah.
of mine that I have a handful of really good friends. I've been friends with since I was in kindergarten still. Really good friends of mine. And they do well, but you're just like, man, you're 5 years behind me now. 10 years behind me now, right? So I think that, not to compare yourself to other people, but just to motivate those of you that are having trouble to really kind of push through, give it 5 years. I dare you. You'll be laughing, ha ha ha,
Yeah.
all the way to the bank. Now, last but not least, real quick, for those of you that stuck around, I wanted to give like just really quick strategies for buyers and sellers. If you're going to buy a primary residence or if you're going to buy an investment property, this is the order of operations. Figure out your financing. Don't just go to the bank and be like, hey, what can I get for a mortgage if I make 100 grand a year? No. If you don't have experience with financing, go talk to the mortgage broker or go make friends with a bunch of different lenders and really get your hands involved with every step of the way. If you're looking at me like, Zach, the last thing I want to do is talk numbers with a banker or a mortgage broker or, a mortgage specialist. That stuff doesn't interest me. I want to just hunt deals. Okay, go get a good mortgage broker that is an investor and does the deals that you want to do and just tell them to do it. Otherwise, get your hands dirty and get involved and learn every step. Next up, Adam, wants versus needs.
Yeah.
Like most people, delayed gratification is a little tricky. The definition between wants and needs sometimes a little tricky for people. Need, non-negotiable. If it doesn't have this, I'm not viewing the property. It doesn't make sense for my investment.
Yeah.
Want, man, that'd be really nice to have if I can get it in my price point. Nobody cares about your wants. The needs are more important. If it
Yeah.
doesn't have all the needs, we're not looking at this investment. Next,
Yeah.
and shop fast. The amount of deals that you can get just by being there, being ready, and being qualified will
Yeah.
blow your mind. The more
Yeah.
times you view a property, the more offers you do, the more likely it is that you get a deal, let alone a really good deal. Sell right
Yeah.
underneath there. Find the motivated. Well, Zach, how do you know a seller is motivated? Do you just call them and say, hey, I'm Zach. I want to buy your property, Mr. Seller. Are you motivated to sell it? Well, yeah, there's different levels of motivation. Some sellers are motivated to only sell at a specific price. Well, why do they need that price? What else is a variable in their move? Do they need the cash up front? Could they benefit from cash prior to closing? Could they benefit from additional streams of cash flow via VTB after closing? Are they interested in partnering on the investment? There are so many different conversations that you as the investor or your agent, if you're relying on an agent to find you and negotiate those deals, have to bring to the table. Human beings are lazy POSs. The path of least resistance is the path that we all want to go. So
Yep.
bringing up ideas or different things that you are open to as an investor or a buyer to determine what parts of the deal they need or that they're willing to negotiate on will dramatically improve. And just dig. I'm looking at properties that have price changes. I'm looking at properties that have switched realtors. I'm looking at properties that have expired and come back on market. I'm looking for counter offers on properties. I sent somebody deals. I can't tell you how many times this year I put in deals for investors, haven't even gotten a counter offer back because the agent either sucked or the seller was so far off in price expectations they didn't want to negotiate. Well, you know what? That tells me that they're not motivated to make a deal. Don't let a deal die in your hands, ladies and gentlemen. Always send them an option back. Make them say
Yeah.
no. Make
Yep.
them say no. Right?
Yeah,
And dig.
that couldn't be better advice. I mean, that's literally the key, right? It's making offers and never letting it die on you.
I never, unless my client is explicitly instructing me not to send a counteroffer or sign it back, I almost always advise that we give them a chance. You never know. So, for you sellers out there, top 25% is competitive. Know that there are more properties on the market now than there have been for a decade, so you will have to compete with other listings. Plain and simple,
Yeah.
right? So if your home isn't showing 10 out of 10, if it's not priced well, and if it's not marketed well, one, it's probably not going to sell. But you don't have to have a 10 out of 10 listing with the best locations and the best features in order to sell. It just means you need to be priced appropriately. You need to market to those target buyers. Look, if you have an investment property that's not getting incredible rents, that's okay. Those properties still sell if you can offer value, whether that be price, terms, or a combination of. And if you're marketed to those investors that are willing to do the work to get the asset in the right place. But again, it is a give and a take. So for buyers out there looking to make a move before the end of the year, I would get the ducks in the row now and start shopping because more inventory is going to start coming to the market in September. A big spike in inventory is expected in September towards the end of October for people trying to make a move before the end of the year. So if you're a buyer, I'd be shopping those 60 days. And if you don't find a steal, you should be getting real sweet deals towards November, December, January, as those people that are either really motivated stay on the market or come to market late, right?
Yeah.
And for you sellers, I'd be really trying to hit that September market. That should give you at least that 30 to 60-day window where buyers are still trying to make that move before the end of the year. There may be more competition, but if you're priced well and you're marketed well, you'll get eyeballs and you will get offers. So we went long today, Adam. I apologize. Every time I come on, I'm like, you know what? I want to be more concise, but we get along and I know we're investing and we got lots of stuff on the go and I'm in the middle of a bunch of stuff with clients. So like this stuff's exciting for me. So for
Yeah.
those of you that are, thinking about either building a portfolio from scratch or you have one and you want to expand on it, hit me up. I'm happy to have no obligation. I'll share my advice. If you need contacts, like we're an open book. My partner, Matt, and I, we're going to be in business in Waterloo region for another 20 years. Like if we can provide value now and we end up doing business 10 years from now, awesome. If you guys are ready to rock and roll, we want to do some business this year, great. But if we can provide value or share contacts that'll accelerate your growth, this is really what we want to help. So email me portfolio at zack@phippsbrittain.com. We'll hop on a quick call. I can help you run deal analysis, do site visits, refer contractors, financiers, whatever it may be, to improve current portfolio or hopefully expand if that's what you want to do. So everybody, I appreciate the time. I've had lots of good support. The comments in the last video cracked me up too, Adam. So I'm
Yeah.
looking for some good comments on pricing, what we think values are going to be like in a year or two.
Yeah.
And really just, our market's kind of starting to shift towards the other direction in terms of people getting back in. So it's exciting for us and a lot of our people. We're really looking forward to the rest of this year.
Yeah, that's awesome. Thank you, Zach. And guys, as always, I appreciate having Zach on here from Phipps Brittain because Zach's as real as it gets. And this channel has always been about real people doing real things. And Zach, you brought a ton of value today. I'm really excited for next month where we talk about how to actually grow those portfolios, get started, and
Yes.
focusing on the repeat part so that people can have a better understanding how to get started at from 0 to 5 properties and hopefully double that up. So yeah, I really appreciate you coming on today, and it's so good to be back on the channel after a summer off, and I'm
Yes,
excited for
sir.
the fall market. So yeah,
Thank you,
let's
guys. Thanks,
I'll
Adam.
see you in the comments, Zach.
I'm going to torch some people. I'm looking forward to it. See you guys.
Have a good one, guys. We'll see you back soon.